1, 2, 3.
Well, the sensex and the Nifty ended the day flat after RBI's status quo policy, but bank stocks and mid-caps saw healthy gains. For the week, the mid-cap index is up 4%, marking the biggest weekly gain in 7 months. On Editor's Roundtable today, we highlight the key points of the RBI's monetary policy. We also deep dive into the Aditya Birla Group and we tell you what's working for them. And we take a look at gold and silver prices and discuss how to play this theme. I'm Sonia and today with me are the editors Nimesh, Nigel and Ekta. Folks, this was a very interesting week, right, for the market. I mean, we had a strong week, resilient week. Despite everything, the Nifty was around the 22,500 mark. And there's been so much domestic money coming into this market that despite all the volatility, we've held afloat.
And the good part is that the mid-cap index has bounced back. The mid-cap index was at 4%. That was a big pain point in the month of March. And come April, the new book has started, funding has opened up, and we've seen a big pullback in the mid-cap and small-cap stocks. So from a portfolio point of view, a lot of people and investors must be happy this week. As Nigel pointed out, forget the market, at least the portfolio should do well.
Yeah. And FY24 actually was a very good year. Yeah. And you were warning investors that, it may not be so good year FY25. But the start has been good, and the biggest outperformer, from the larger cap names, is the biggest underperformer of FY24. The banks were underperformers in FY24, and they've started off at least FY25 on a positive note. This week, in fact, the Nifty Bank almost made fresh all-time highs.
And what stood out was the advance decline ratio this week. We started Monday at 8:1 and we ended Friday at 3:2. So the entire week, the breadth of the market has been extremely positive. And I think that's a good indicator of sentiment as well.
Oh, absolutely. And we had big events as well, right? The RBI policy, you also have the US data, etc., the jobs data, that is. But let's talk about the market and how we saw it this week, in case you missed out on it. Very strong, very resilient market. We've gained for 3 straight weeks now. In fact, in the week gone by, the Nifty went up 1%. The mid-cap index was up about 4%. In fact, the mid-cap saw its biggest weekly gain in the last 7 months. And a large part of that contribution came via the Nifty Bank. The Nifty Bank gained over 2% this week, and it was the biggest weekly gain in the last 4 months. Now, there are a couple of things that are happening. One, as we mentioned, is domestic institutional investors have been pumping in money thick and fast. Remember, it could be a pre-election rally as well, because you've had a couple of instances to suggest that the NDA government has strengthened further, the opposition has weakened. In the recent events as well, Prime Minister Modi has come out and said that they will come back to power for the 3rd term, and that has kept the markets very, very steady. But Nimesh, you tell us, what are the dealing rooms talking about? The broader market resurgence is one thing, but is this something that could be sustainable?
Well, Sonia, so the good part is that the broader markets have come back in a good way. The indexes are 4%. But look at individual stocks. At a portfolio level, the stocks are up 15, 20, 25%. So that's been a good relief rally for a lot of the investors as well, where the portfolios have been back in the green. Again, it's backed by some institutional interest as well. In fact, the other good part was the return of the banking sector stocks. As Nigel pointed out, that's been the big underperformer, and that started to picking up. HDFC Bank has been a classic example. Now it looks like that would be the leader of this rally if the momentum continues. So HDFC Bank is something to be tracked very, very closely. We have this very close MSCI angle as well to the HDFC Bank, so that's something to track. But in general, the flows are back, the momentum seems to be back in the broader markets. And overall, the sense is now that the earnings season is going to start, that will be a big trigger to watch out for, and especially for the IT names. IT stocks are relatively going soft into the earnings season. So if there is a good surprise from Infosys and HCL Tech in terms of guidance for next year, you could see a bit of a relief rally in the IT names as well. So that's something to track very closely. And I guess the only pain point for the market from here on would be the commodity stocks, commodity prices per se. The oil is back to 90. We've seen across the board all the commodity prices have moved up. So that's a bit of a niggling worry. But the fact is that the momentum in the mid-cap stocks is back, and the flows are pretty much strong, as you also pointed out.
Well, just to add on to one more data point, the small-cap index for this week was up close to 7%. So it was the best week we had, from the small-cap index since April 2020. So That's the kind of start that we've had to the fiscal. So good times.
Good times, and that's the kind of pullback we've seen, right, from the lows. But the other event was a Reserve Bank of India's policy. They've held the policy rates for the 7th time in a row. As expected, the MPC, in a 5:1 majority, decided to keep the repo rates unchanged at 6.5%. But the more important is the guidelines from here on, right? When is the first rate cut coming through? But Ekta, give us the key highlights.
Well, yes, like you mentioned, it was a status quo policy for the 7th consecutive time. Now, rates have been held steady since April of 2023. But largely, it was an inline policy. Nobody was expecting any kind of change. What did come through is that they seem to be a little more sanguine when it comes to inflation. So the RBI estimate for inflation is held steady at around 4.5%. But they are probably expecting it to dip sub 4% during the year as well. So Q2 FY25, they changed their forecast to 3.8%. So they did allude to, or they gave an example of the elephant and CPI. So they're expecting the elephant to probably be in the jungle by, the second half of FY25 at least. But there are risks to inflation. So for example, there's Brent crude, which is up over 10% from the last policy, vegetable prices, monsoon. The other point is that the forecast for the GDP was unchanged at 7%. Everyone was expecting it to be hiked. Now, that's probably because, there are variables such as elections, Fed, etc., which are in the way. So that wasn't that much of a game changer. What the governor did say in his conference, which is important to note, is that the policy is primarily determined by domestic circumstances. And the cuts and the hikes in the past have in fact preceded US actions. So it's not necessary that they're going to follow the Fed. They could just probably work on their own, and rate action will be determined by the inflation trajectory. So the first rate cut is probably now expected in August. So probably a little after the Fed, but it could even probably be later. So then events such as the election, monsoon, Fed, all of that will be out of the way. So August will probably be a probable time for rate cuts by the RBI.
Okay, well, joining us now is Harish Bihani. He's the Senior Fund Manager at Kotak Mutual Fund. Harish, thanks a lot for joining in. The big question that everyone's asking, right? After the kind of run-up that we've already seen in the market, do you think now we are ready for some sort of consolidation or time-wise correction? Or do you think this uptrend is something that can continue?
It's very difficult to say, Sonia, on what will happen in the near term. So we don't try and forecast that. That said, as you rightly pointed out, that a lot of the returns have been upfronted last year, early part of this particular year. After that, cycle from greed to fear and back to greed again. So a lot of the returns have been upfronted. And with the results season coming in soon, you will see some consolidation in the market. You will see a lot of sharp reactions to the earnings in the upcoming result season.
Mm-hmm. All right. Hi, Harish. Welcome to the show, and thanks so much for joining in. Well, last year, the leader was the PSU pack. They did very, very well. And one would say that maybe valuations are still not very, very stretched out there. What's your view on the PSU pack, and what do you like out there? There is select stocks like the railway theme, the defense theme. They are pricing in earnings for the next 2 or 3 years as well. The banking theme as well has done very, very well. So what's the theme you like from the PSU lot?
Sure. Over the last few years, what's happened in the entire PSU pack is that there's been a mean reversion trade. A lot of companies were trading at cheap valuations. You had an earnings catch up after abysmal numbers for many, many years, and say, especially the banking sector. So there was an earnings catch up and there was a valuation re-rating which took place. To our understanding, the valuation, the mean reversion is largely played out. So incrementally, earnings will determine the fate of all the PSU pack. Wherever earnings is strong, say, for example, if it's the defense sector or if it's the power sector, you will continue to see buoyancy in the names of in those particular sectors. Wherever earnings will come off, say, for example, the banking sector, in some of the cases, some names we are looking at earnings coming off after a sharp increase we have seen over the past few years, you will see valuation re-rating stopping in such cases.
Hi, Harish. What did you make of the RBI policy? Because as Ekta pointed out, the first rate cut is expected only in August. So how are you positioned in the financial sector stocks, both private sector bank stocks as well as the PSU bank stocks?
I think if you look at how we have been discussing on the Fed rate cuts and now the RBI policy and the rate cuts in India, it's extremely difficult to forecast that. To our mind, we are positioned to ensure that wherever Fed cuts or the RBI cuts in the later half of this particular year, our portfolios rightly aligned to those cuts. Without forecasting that when this will happen, this is a question of when this is going to happen, and not in terms of if it will happen or not happen. So it could take a little longer versus what we are thinking at this point in time. But the portfolio should be aligned towards a rate cut, maybe in the second half of this particular year. It could take a little longer given how Fed is reacting and Fed data points are coming through. Even in Indian data points, how crude is behaving, it could take a little longer. That said, one needs to be prepared for a rate cut eventually.
Okay, well, the one group that did quite well recently is the Aditya Birla Group. They are on an expansion spree. The group's market capitalization has also seen a sharp rise in the last 1 year. Nimesh is here with a deep dive on why the Birla Group is doing so well. Nimesh, what's cooking?
Well, Sonia, to me it looks like Birla Group was the newsmaker of this week.
Yeah.
Looks like they're trying to bring their mojo back, and they're trying to do all the right moves across all the group companies. So let me just go to the wall and explain why I'm saying this. Just look at the Birla Group in the last 1 year. It looks like they're trying to get their mojo back and do all the right moves across the group companies. The group has added 2 lakh crores in market cap in the last 1 year, and now they're commanding a market cap of 7 lakh crores. So that's the kind of market cap addition they've done in the last 1 year. But when I'm saying they're doing the right moves, let me go across individual companies. The first stock on my list is Vodafone Idea. All eyes will be on the board meet tomorrow, where the promoters are going to infuse 2,075 crores. They've already taken a shareholder approval to infuse 20,000 crores into the company. So it looks like the capex and 5G expansion finally will be on the cards as far as Vodafone Idea is concerned. What has the stock done? The stock is almost doubled in the last 1 year. So that's the first group, first company in that group. Now the second group which has done, which has made a right noise is Aditya Birla Fashion and Retail. The stock has been a relative underperformer compared to the peers, but now on April 1st, the company announced a vertical demerger of Mundra Lifestyle as well as the fashion businesses into separate entities. And interestingly, on that day itself, the stock rallied 15%. And just a few days before that, government of Singapore actually converted their warrants into equity. What has the stock done in the last 1 year? Just 13%. So, and in fact, it's been trading at a discount to the peers as well. Look at Aditya Birla Fashion on FY26 price to earning, trading at 33 times versus Trent, which is quoting at almost 90 times. So it looks like now they're making the right moves in that particular company. The third stock company in my list is Ultratech Cement. Recently, they have reaffirmed their position as the #1 cement player in India. They want to focus on capacity expansion, and they've announced at 32,000 crores of capex as far as Ultratech Cement is concerned. What has the stock done in the last 1 year? The stock is up 30%. The next company or the next stock in my list is Grasim. This is going to be a big game changer for the group, is what a lot of analysts believe. They've announced the launch of the paints business, which is Birla Opus. They're guided for a 10,000 crores of revenue and profitability in the next 3 years. What has the stock done in the last 1 year? The stock is up almost 48%. But this is one stock where a lot of analysts are bullish on. The other group company which I'm focusing on is Hindalco. Well, the stock has actually come off from the highs recently after the company announced an cost overrun in one of the Novelis subsidiary. But confidentially, they've filed for an IPO, and they're looking for an Novelis IPO later this year with a valuation of at least $1 billion. So that is again something to focus on for as far as that group is concerned. That's what has the stock done? The stock is up 42% in the last 1 year. The next stock on my list is Aditya Birla Sun Life AMC. It's the 6th largest AMC in that group within India. Recently, the promoter sold 11.5% stake just to bring the stake to 75%, which is the minimum public float norm. What has that stock done in the last 1 year? It's up around 42% in the last 1 year. And the last stock in that group is Aditya Birla Capital. Now, again, this has done a smart move here as well. Recently, they announced an amalgamation of Aditya Birla Finance to create a largest unified operating NBFC. This has largely been done to skip the public listing, which is required as per the RBI norms. And in fact, ever since the new CEO took over, Vishakha Mule, the stock has actually doubled ever since she took over, which is up around 130%. So across group companies, it looks like they're making the right noise. But look at the overall financial picture of this group. In terms of 5-year revenue CAGR, Aditya Birla Capital has done a 22% revenue CAGR. Aditya Birla Fashion has done 11%. But the lowest in that group is Vodafone Idea with just 8% revenue growth in the last 5 years. But look at the profit CAGR of within the group companies. Again, the highest has come in Aditya Birla Capital, 47%. whereas the lowest has come in Hindalco, which is around 11%. So again, they've done a decent job as far as the profit CAGR is concerned within the group companies. Now the overall debt picture, that's been a big concern for them, right? The biggest pain point is Vodafone Idea, still sitting on 2.4 lakh crores of debt. The next big is Grasim, followed by Hindalco, and again Aditya Birla Fashion also sitting on 9,000 crores of debt. So it looks like finally, Aditya Birla Group is trying to get the mojo back, make the right noise, and do the right things. All eyes will be on the execution. If that do that, looks like there could be another good year for Aditya Birla Group.
You know, and that point you made about Vishakha Mulye, right? It's very important. I remember you pointing this out earlier as well. I think she joined in July of 2022, and she has, before that, she had many different roles in ICICI Bank. She was the executive director before leaving. So you had done this piece, I remember, on how there's a change in management which has impacted stocks positively, and this was one of those companies.
And look at not only the stock price, look at what Vishakha has done after she taking over Aditya Birla Capital, right? AMC, they've sold the stake, bring down to 75%, which was required. They've announced the merger of Aditya Birla, the group company as well, so to avoid the listing. Across the group, it looks like they are doing the right things, they're making the right noise to make sure that they're aligned with what the investors want and how they can improve the financials as well. So it's a clear strategy to me, and looks like the way they've added 2 lakh crores of market cap last year. If they deliver on the promises what they're doing, maybe the next year could be again a good year for Aditya Birla Group.
And not to mention that there's a Vodafone board meet which takes place tomorrow
again,
as well.
It's going to be a big news, right? We saw this what happened to Aditya Birla Fashion when they announced the demerger.
So that's going to be for
promoter
fundraising,
putting in money,
but,
they have a shareholder approval. If they can manage 22,000 crores in Vodafone Idea, see, they've been struggling for almost 2 years now. And if they can manage and raise this money, potentially there could be a bit of a relief for Vodafone Idea as well.
I just want to pose that question to Harish as well. Harish, this reminds me of when Chandra joined the Tata Group, right? I mean, all of those companies did phenomenally well since he joined, and now Vishakha, since she took over at the Aditya Birla Group, the same situation is playing out. How much premium do you ascribe to strong parentage, strong management, and how do investors look at this now?
So on average, you're right, Sonia, that a management change is taken as a positive by the market. That said, the investors will start looking for the right capital allocation decisions by the management, which is extremely important in such cases. Is the management putting money in the right areas, or are they taking out money from the areas which are burning capital in the earlier cycle? That's extremely important for us as investors. Second part is in terms of the focus on growth. Again, focus on growth is in the right areas, which will require lesser capital or which will require more capital. Will it be a return on capital dilutive, or will it be return on capital accretive? So there are many questions that we ask ourselves. We ask the management teams when we meet them to understand and appreciate. And wherever the companies have taken the right decision, we have seen a swift rating, whether it's the group that we're talking about right now or any other group in the past. And we have many cases where it didn't work out too, largely because of capital allocation decisions that they had taken.
Okay, well, we need to take a short break on that note, but we have a lot more lined up. We're going to be discussing how the gold and silver market is performing. We'll also give you some key trading cues with Harish Bihani. Stay tuned.
Welcome back to Editor's Roundtable. We're just doing a roundup of all that happened this week, and Harish Bihani is sitting with us to discuss that. Harish, the one stock I wanted to ask you about was Zomato. I mean, I know you may not want to give your comment on individual names, but just in general, you know, some of these businesses like Zomato have done phenomenally well. In fact, the entire consumption space, look at something like an Avenue Supermarts, that too is doing well. How do you pick and choose in this space now?
No, it's fairly simple that you look at the capital cycle, which is whether capital is entering a particular sector, moving out of a particular sector. In case of some of the food delivery business, clearly it's a duopoly business and there's optionality. So the range of outcomes and new optionalities have emerged, and market rewards such narratives clearly. This is regardless of a particular company. This is in general across sectors, across companies, that we have seen that as the range of outcome narrows, market rewards such companies and optionality comes in, then you see a very, very swift re-rating.
Okay, well, Harish, you know, IT is going to start being in focus next week onwards. April 12th is TCS. Infosys is on the 18th of April, but nonetheless, you know, the focus is going to begin. What's your sense in terms of what earnings would look like? What would your approach be?
So if you recall, our last conversation clearly said that the overall IT sector scenario continues to be fairly nebulous. It's still in terms of the visibility of how things will look like for the next 1 year. It's fairly difficult given what's happening in US and how US companies are tightening their belts, and they aren't opening up their purses for discretionary spending, which will impact IT companies. That said, if you take a slightly longer view, all the changes that we are seeing, all the changes on the artificial intelligence, ChatGPT, OpenAI, and similar other companies investing in artificial intelligence, and the overall pace of investment in IT will only keep increasing over the next few years. So according to our understanding, any disappointment should be looked as an opportunity to invest in this particular sector. And that's how we are positioning our portfolios.
Okay, let's talk about the prices of gold, right? I mean, while the equity markets have moved higher, gold has also moved higher. Silver prices have also rallied over 10% each this year. Nigel, you've done some data crunching for us.
Well, that's right. One way to play gold is you go buy physical gold, buy ornaments, or you buy these sovereign gold bonds as well. But let's focus on the way you can play it via the stock market. So I'm calling it the non-linear plays on gold as well as silver, and basically the precious metal plays. First up, if you look at it, the gold financiers, well, they could be potential gainers. And that's been proved in the past as well. We have some historical data if you're looking at Muthoot's AUM growth, and it perfectly tallies in with what gold prices did as well. So there is a bit of a relation, and that's been proved too in the past. The second point is why gold financiers could have a bit of a tailwind is because there's a ban on new gold loans coming in from IFL, and IFL's market share in in the past fiscal, that's FY 23, well, it had gone to around 15% of the NBFC market, and that's jumped up from nearly around 6%. So you have one player that moves out. Obviously, it gives them headroom to grow from there on as well. And how does it help then these gold financiers? What happens is when gold prices move up, your loan to value, that comes down. So it gives them additional headroom to borrow more on the same tonnage of gold. So that's one factor. So that will help your loan growth. Now, on the same tonnage of gold, the same number of branches, well, you're seeing more amount of loan growth. Expenditure is not going up, right? So operating leverage plays out. And if that plays out, then your ROE as well does expand. And some of these companies have seen a bit of a derating in terms of their ROE. So that can bounce back. And the auctions or the asset quality as well, the reduced auctions will result in asset quality staying in check. So that's how gold financiers basically gain. Now, DAM, they're saying between the two gold financiers that are listed, well, they are saying that they prefer Manappuram in comparison to Muthoot. Why is that? Because actually Manappuram has been a relative underperformer. So as of current valuations, well, Muthoot trades at a sharp premium in comparison to Manappuram. But keep in mind, most of Muthoot's book is attributed to gold, while Manappuram, it's a little lower in comparison to Muthoot. So that's between both of them. If you look at the banking names, well, CSB, they have a high proportion of their total book that's attributed towards gold, much higher than other banks as well. So that's nearly around 48%. So that could be another play in there. Now let's shift focus to silver. Some believe that silver could outperform from here. Silver prices, keep in mind, are up by close to around 12%, in this year so far. And Vedanta and Hindustan Zinc, some of those unlikely players, well, they are the only way to play the silver move. So Hindustan Zinc, 20% of their revenues come in from silver. The EBIT is nearly around 46%. And because it's a byproduct, the margins are very, very high at more than 85%. But Hindustan Zinc is not very, very liquid. So that's why you're seeing Vedanta making fresh 52-week highs, because Vedanta has 65% stake in Hindustan Zinc. So the indirect way of playing silver could be via Vedanta into Hindustan Zinc. And that's why, in fact, so keep in mind, some of these gold financiers as well as maybe Vedanta could be a stock that should be kept on your radar. Well, Harish, I wanted your view on these names. You know, gold is moving up, silver is moving up. Either you could buy the physical gold, you know, you could play it via gold base. But what do you think of the gold financiers or maybe some of these metal companies?
I guess in general, when we look at any such sectors where there's a temporary tailwinds coming in a particular sector, we try and understand whether this tailwind is something which is far more structural in nature or something which is transitory and could go away in the next 3 to 6 months. And in such cases where things are far more structural, where regulatory tailwinds could remain for much longer because a particular player has moved out in a particular sector, plus gold prices which have been buoyant could remain buoyant, say in this particular case, we look at some of them far more favorably and vice versa.
Okay, all right. Harish, thanks a lot for joining us and giving us your views. With that, it is a wrap on this broadcast. More news and updates continue right here on CNBC TV 18. Thanks for watching.